Mr. Stephen Carroll is back with us today on the programme. He's starting with Facebook. Two competition law complaints against the company in the US. They've been dismissed, haven't they?
A federal judge has thrown out cases taken by the US competition watchdog and a coalition of states against the social media giant. The judge saying the claims by the Federal Trade Commission were unsupported. The FTC had accused Facebook of using a so-called buy or bury strategy to stamp out competition from rivals. Erin Ogunkeye has the story.
A major blow for U.S. regulators' attempts to rein in big technology companies. A federal judge dismissed an antitrust lawsuit from the Federal Trade Commission against Facebook, arguing prosecutors did not demonstrate the social media giant holds monopoly power.
These allegations, which do not even provide an estimated actual figure or range for Facebook's market share at any point over the past 10 years, ultimately fall short of plausibly establishing that Facebook holds market power.
The FTC had accused Facebook of attempting to stamp out competition from rivals when it acquired Instagram in 2012 and WhatsApp 2 years later. The federal agency was pushing for a forced breakup of the three platforms. In a second setback for regulators, the district judge also tossed a similar case by a coalition of states, considering the violations of competition law they claimed took place happened too long ago. Facebook welcomed the decision.
We're pleased that today's decisions recognize the defects in the government complaints filed against Facebook. We compete fairly every day to earn people's time and attention.
But the failed lawsuits aren't necessarily the end of the road for the FTC's push to curb the power of big tech companies. It has 30 days to file a new lawsuit correcting the weaknesses of the first one by scrutinizing Facebook's acquisition of Instagram and WhatsApp.
Facebook's investors welcoming news of those decisions. Facebook shares up by 4% on Wall Street on Monday after that news emerged that the court had thrown out those competition cases. That pushed Facebook's market value over $1 trillion for the first time.
Now, here in France, the government is holding firm on its predictions for economic growth this year.
Finance Minister Bruno Le Maire says the French economy will grow by 5% in 2021. Now, that's slightly lower than other predictions from international organisations like the IMF and the OECD. Le Maire telling French television that the government was sticking to its 5% figure because of the continuing risks related to COVID-19. That's despite the strong jump in consumer spending since restrictions have been lifted here. And meanwhile, the World Bank says that China's economy will grow faster than expected this year. Its latest report forecasts growth of 8.5% for 2021. That's after expansion in the world's second largest economy hit a 44-year low last year. China was the first major economy to recover from its pandemic-related slump, but the World Bank has warned that a full recovery will require more progress in vaccinations.
Right, let's bring you up to date then with what's happening on the market, Stephen.
European shares starting with some small gains. One of the exceptions, though, is the French broadcaster TF1. Its shares are down around 1% after France was knocked out of the Euros last night. Fears there, of course, that there'll be fewer viewers for the rest of the tournament. Bad news for advertising, of course, if you're a broadcaster. So that's the effect of the Euros playing out on the markets. In Asia, shares today mostly trading in the red. News from the World Bank there of the improved picture for the Chinese economy not helping to lift the Chinese markets. The Shanghai Composite down by 0.9%.
Now then, Boeing could be facing more trouble from regulators. This is over its newest plane.
The US Aviation Safety Agency has indicated it's unlikely to approve the 777X plane for flight until 2023. That's because of changes Boeing is making in the aircraft's software and hardware. The Federal Aviation Administration's concerns are just the latest setback for the plane builder. It had planned for the model to enter service last year.
And Stephen's ending on quite it's a sad story, this, Stephen. It's the end of an era for a robot.
Yeah, Japan's SoftBank has stopped making its humanoid robot, Pepper. Pepper was first unveiled 7 years ago. It's since been used to greet people in shops and hotels and was even used during Japan's quarantine hotels during the pandemic to help people ease their loneliness because you can talk to Pepper. But a slump in demand has led its maker SoftBank to suspend production as supplies of the robot have piled up. Now, this news is coming as Reuters is reporting the company is planning to slash jobs at its French robotics unit, which employs around 300 people.
I suspect the conversation is a little bit limited if you talk to Pepper.
I don't know. I've seen demonstrations that are pretty impressive, but
okay. We'll see.
Still talking to a robot at the end of the day.
Poor old Pepper. Thank you very much. No robots around here, neither Stephen nor